funding bleed plus clustered ETH leverage near $2,600 to $2,400 sets up a domino path towards 2268 threshold. This is not good. A single wallet on Hyperliquid holds a long position worth roughly $649.6 million in Ethereum, with 223,340 ETH entered at around 3161, with a liquidation estimate near 2268. As of press time, ETH traded around $2,900, and the liquidation threshold sits about 22% below that. This is far enough to avoid imminent danger, but close enough to matter if volatility accelerates. So some whales basically sitting on $649 million worth of Ethereum leverage, and hopefully they don't get liquidated. The position has already bled roughly $56 million in unrealized losses and another $6.79 million in funding costs, leaving a cushion of about $129.9 million before forced closure. That sucks, man. That really does suck. But that's the name of the game. When you're talking about leverage, spot, when you buy spot, you buy some Cardano at 36 cents, and you accumulate what you can. If it drops down to 33 cents, you can get a little bit more, average your entry down. You know what I mean? You don't really lose. You just can kind of improve your position as best you can with the capital you have available, if you believe that asset is going to go up. In leverage, if it goes down a certain point, well, you can lose it all. You get liquidated. And that's what sucks about leverage, because the institutions, I definitely wholeheartedly believe, control the leverage markets, especially in crypto. I've explained why a million times and how that works. So I don't know. The same wallet, however, made over $100 million during October crypto sell-off, riding 2 Bitcoin shorts and an Ethereum long opened in early October to a combined profits of $101.6 million across positions that lasted between 12 and 190 hours. Well, hats off to you, whoever you are. Hopefully this goes well, because if it goes well for this gentleman or woman or whoever it is, then if they do well on this trade, we all do well. So hopefully that works out. My long on Night token is down $347. So we'll see what happens with that. I mean, this is interesting because we had this crazy wick down to like basically 5 cents, 0.05157. And that was on the 18th. So maybe we're working our way down from there. I don't know. This looks like a nice solid M pattern. Looks like we would have had one drop there, probably 2 drops here. We could be concluding a third drop down somewhere. I don't know where this third drop could end, but ultimately then it's at some point we could get a reversal and start working our way back to the upside. A lot of the stuff I do believe hinges on the Clarity Act and what's happening. And if I look at, I thought I had it up here. Okay, I guess I don't. This is Cardano's liquidity heat map. When I look at Cardano, you can see that a lot of this stuff, a lot of the liquidity really just vanishes. I mean, basically anything below 34 cents, there's no liquidity there. And the highest concentrations, I mean, the highest concentration at the lowest point is around 34.8. So, I mean, beyond that, there's really not that much activity. So I'm hoping it doesn't go much lower. I mean, the floor has generally been around like this 33 cents. That was the floor. And we still didn't even, break down into that area. So, and then of course, a lot of that is dried up. And you can also see here the volume on the liquidity of these orders. I mean, it just continues to drop off. So, there's no real reason for market makers to want to try and send the price lower. There's actually more available to the upside. There's more volume and everything. There's more liquidity. There's more money to be had if Cardano goes up in price than if it were to go down. It's probably about the same, I guess, but the volume is much higher to the upside. So we'll see how that plays out. I'm a little concerned, but I do have some hope for some things in the shorter term. Bitcoin's prices are recovering as gold retreats because a surprise framework deal just killed the tariff threat. And that definitely seems like when Trump comes out, tariff this, tariff that, then all of a sudden the markets start to go down. And I definitely believe it's the foothold that a lot of the institutions have on the space, quite frankly. President Donald Trump's announcement that he would not impose tariffs scheduled for February 1st triggered a sharp reversal in risk assets, with Bitcoin rebounding above 90,000 after testing 87.3 earlier in the session. The move erased most of a two-day sell-off driven by trade war fears tied to Trump's Greenland push, confirming Bitcoin's status as a high beta macro asset that amplifies directional swings when geopolitical headlines shift quickly. Gold and silver tumbled following the announcement. So it's like the more uncertainty there is in what's happening with Trump and the tariffs and Greenland and Venezuela and all this stuff, it's like it's pushing the value of gold and silver up. But once we've established some more security in what's going to happen next, that's when I think that we're going to start seeing some of that spill off into risk on assets like crypto. And I think that the infrastructure bill is going to play a big part in that, quite frankly, because I think once we have that in play, then, I mean, let's just be real about it. Things are going to turn around. There's some other things in my feed here. U.S. Senate will continue discussing Bitcoin and crypto market bill at 2 p.m. Well, they should be talking about it right now. This bill will inject over $2 trillion into the market. Actually, a lot more than that. I mean, everything's being tokenized. So this whole thing, and I pointed this out yesterday, Larry Fink really makes me nervous because he just makes me nervous, and I'm not feeling what he's putting out. Everybody's trying to figure out what common blockchain, like you remember yesterday, I pointed out how he was saying how we need a common blockchain. And I'm like, it's not going to be anything that we are using. It's going to be something that they create themselves.